All right, let's dive into Senores Pharmaceuticals. They're getting ready for an IPO, and you want to know if it's worth it.
We're going to unpack their business model, financials, how they're doing in the market, all those IPO details.
Their R&D and the risks, of course. We've got tons of reports and analysis to help us.
Let's do it.
So first up, their business model, these reports show, Senores Pharmaceuticals is working in two very different types of markets.
Right.
Those tightly regulated markets like the US, Canada, and UK.
Yeah.
And then, like 43 emerging markets, it's a lot.
That's a huge spread.
Plus, they've got that whole separate thing going on in India, supplying hospitals.
Yeah, it's a really interesting strategy. They're very diversified.
Yeah.
You're right about the US market. It's lucrative, for sure.
Yeah.
But it's really competitive, so tapping into emerging markets, that's a smart hedge for them.
Right.
They're diversifying their revenue streams.
Yeah. And speaking of not putting all their eggs in one basket, they're also doing contract manufacturing
Right.
at their Atlanta facility, making drugs for other companies.
Exactly, that CMO operation, that's a smart move.
Yeah.
Because it taps into the growing demand for specialized drug production, even from companies that aren't their direct competitors.
Dang.
And it aligns perfectly with their focus on complex, underpenetrated molecules.
Okay. Complex, underpenetrated molecules. That sounds a little intimidating. Can you break that down
Sure.
for me and for our listeners who might not be chemistry experts?
I think of it like, imagine a crowded marketplace, and Senores is seeking out those hidden gems.
Okay.
These are drugs that are harder to make, so fewer companies do it, but they often command higher prices and face less competition.
So they're like the pharmaceutical treasure hunters.
Yeah,
But treasure hunting can be expensive.
it can be.
Let's talk about their financial performance.
Okay.
The reports show some really impressive revenue growth, especially in fiscal year 2024.
Yes.
A 623.74% increase in total expenses.
Wow.
That's going to raise some eyebrows, right?
It's definitely eye-catching. But remember, context is key. A big chunk of that is tied to their expansion and acquisitions.
Okay.
And successful product launches, their acetaminophen butalbital combinations are doing really well.
Right, especially in the U.S.
In the U.S. market, yeah, that's where they're getting almost 61% of their revenue.
So a lot of their success is tied to the U.S. market.
It is.
That's a bit of a risk.
Yeah.
Are they making money, though?
Here's where it gets really interesting.
Okay.
Their EBITDA and PAT are both looking really healthy.
Okay, for our listeners who aren't financial experts, can you explain what that means?
Sure. Basically, it's showing us that Senores is running a really efficient operation and making smart choices about the products they're developing and selling.
Okay, so they're not just spending money, they're actually making it.
They are.
Now, how are they positioned in the market? They're primarily a generics company, right?
Right. But it's not just any generic. Remember those complex molecules we talked about?
Yes.
That's where they're carving out their niche, for example. They've got a dominant share of the diclofenac potassium market in the U.S.
Okay.
They got there early and capitalized on a 6-month exclusivity period that the FDA gives for certain generic drug launches.
So they're really thinking ahead, but that exclusivity period does end eventually.
It does.
So what happens then?
That's where the complex generics come in again. These harder to replicate.
Right.
So it gives them more staying power in the market. It's like building a moat around their business.
Smart.
Even in the generics space.
Yeah, okay. Let's shift gears and talk about the IPO.
Okay.
Why are they going public?
Well, they're looking to raise capital, which makes sense given their ambitions for growth.
Okay.
We're talking about a fresh issue of shares and an offer for sale.
So they're letting new investors in and letting some existing investors cash out.
Exactly.
But where's all that money going? They've got a lot going on.
Yeah, they do. A big chunk of that money is going to their subsidiary, Havix, specifically to expand their manufacturing capabilities for sterile injectables.
Okay, so they're doubling down on what they're good at.
Exactly. And that's a major area of growth for them. It aligns with their strategic focus on those complex molecules.
What else is on their IPO spending list?
Well, they're planning to pay down some debt, which is always a good sign.
Yeah.
It strengthens their financial position and reduces their interest expenses.
Right.
Then they're setting aside some funds for working capital.
Working capital, so that's the cash they need to operate day to day, right?
Exactly. It's the fuel that keeps the engine running. They need to have enough cash to pay suppliers, manage inventory, and handle any unexpected problems.
So they're raising money to invest in growth, pay down debt, and keep the lights on.
Yeah,
Seems like a pretty good plan.
it does.
But what about R&D? Are they developing their own new drugs, or are they relying on generics?
They actually have a really impressive R&D operation, especially for a generics company. They've got these dedicated units in India with a team of over 50 people.
Wow, that's a big team.
Yeah, including a couple of PhDs.
What are they focusing on with their R&D?
They're concentrating on process research, analytical research, and process chemistry research, all crucial areas for developing complex generics.
So they're refining their techniques
Yeah.
and really pushing the boundaries of what's possible with generics.
Yeah, they're not just replicating existing drugs, they're really actively pursuing new, higher value products,
Okay.
both for the US and those emerging markets.
Okay, so they're not just riding the wave, they're trying to shape the future.
Right.
But let's be real for a minute.
Sure.
No investment is completely risk-free.
True.
What are some of the potential problems that Senores Pharmaceuticals might run into?
That's a crucial question. Let's start with regulatory compliance.
Okay.
The pharmaceutical industry is incredibly heavily regulated,
Yeah.
and any slip-ups can have really serious consequences.
Like what?
We're talking product recalls, fines, even legal action.
Yeah, that's a nightmare.
Then, of course, you've got competition. The generics market is really crowded.
Right.
There's constant pressure on prices and margins.
Yeah, it's a jungle out there.
It is.
And then, of course, there's the cost of raw materials.
Absolutely. Any disruptions in the supply chain or fluctuations in prices, that could really impact their profitability.
So it's a lot to juggle. But they seem to have a plan to mitigate the risks.
They do. Their diversification strategy, playing in both regulated and emerging markets.
Yeah.
That acts as a buffer. It's like having a diversified investment portfolio. And their focus on complex generics, that gives them more pricing power and reduces their vulnerability to competition.
Okay, so we've covered a lot of ground. Their business model, financials, market presence, IPO details, R&D investments.
That's a lot.
We even touched on the risks, but this is just the beginning.
Yeah.
We need to dig deeper into those financial statements.
Yeah, that's where the real story lies.
So let's put on our financial detective hats and dive into those numbers.
Let's do it.
Oh.
Okay, let's open up these financial statements and look at the details.
All right, so we're going beyond just the headlines.
Right. Remember those impressive revenue numbers we talked about?
Yeah.
Well, the consolidated statement of profit and loss, this gives us a much more granular view.
Okay, so we're getting into the nitty-gritty. I'm ready.
All right, let's start with their total revenue from operations in fiscal year 2024.
Yep.
They hit $1,815.85 million.
Wow, that's a huge jump from fiscal year 2023.
It is. It's a massive leap from $690.64 million in fiscal year 2023.
Yeah, that's huge. But remember, they've got those three different segments, right?
Right.
The regulated markets, emerging markets, and their critical care business in India.
Yes.
How's the revenue split between those?
Great question. That gets to the heart of their strategy in fiscal year 2024.
Yeah.
Regulated markets brought in $103.69 million,
Okay.
which is roughly 61% of their total revenue.
Okay.
Emerging markets came in at $585.87 million, about 32%.
Okay.
And then their critical care injectables business in India, that added another $26.29 million.
So a small but steady part of their revenue.
Yeah, it's a small slice.
It seems like a pretty balanced approach, but are they making a profit?
That's where we see how efficient their operations really are.
Okay.
Remember, EBITDA
Yes.
gives us a really clear picture of their core profitability.
Right.
And in fiscal year 2024, their EBITDA was $358.56 million,
Okay.
which translates to an EBITDA margin of 19.75%.
Okay, so for those of us who aren't financial experts, what does that mean?
Basically, for every euro of revenue, they're keeping 19.75 as profit from operations.
Okay.
And to give you some perspective, in fiscal year 2023, their EBITDA margin was 17.98%.
So they're actually increasing their profitability.
They are, even while growing revenue significantly.
Wow, that's impressive. They're not just growing, they're becoming more efficient too.
Exactly.
But what about their actual profit after all the expenses and taxes are paid?
The PAT, profit after tax.
Yeah.
That's really the ultimate measure of their financial success.
Right.
And Senores Pharmaceuticals delivers here, too.
Okay.
In fiscal year 2024, their PT was a very healthy euro 230.08 million,
Okay.
reflecting a PAT margin of 12.68%.
So for every euro in revenue, they're making 12.68 in pure profit.
That's right.
Not bad, but profit isn't everything.
You're right.
What about their cash flow?
You're right. Cash flow is super important.
Oh, yeah.
It's the lifeblood of any business.
The company can be profitable on paper, but still have trouble managing cash.
Exactly. It's what allows them to invest and grow and handle any problems that come up.
Right.
So we need to look at their statement of cash flows.
Okay.
It tracks the movement of cash both in and out of the company.
So it's like their financial GPS, showing us where their money's coming from and going.
Exactly. And the statement of cash flows for Senores, it shows us some interesting things.
Like what?
Let's start with their cash flow from operating activities.
Okay.
This shows us the cash generated from their core business operations.
So that's the money they're making from selling those drugs and doing the manufacturing.
Exactly. And in fiscal year 2024,
Yeah.
their cash flow from operating activities was positive, $273.11 million.
So they're doing well.
Yeah, it tells us their core business is generating a good amount of cash.
That's good to see.
It's not just profit on paper, it's real cash.
Right. But they also have those big expansion plans and R&D and debts to pay.
Right.
What about their cash flow from investing activities?
Okay, so that tracks their spending on things like property, plant, and equipment.
Right.
And as you might expect, their cash flow from investing activities was negative,
Okay.
$241.79 million in fiscal year 2024.
So they've been spending.
Yeah, they've been investing heavily in their future, especially in that sterile injectables facility.
In the U.S.
Yeah.
So that negative cash flow isn't necessarily a bad thing.
Right. It shows they're putting their money where their mouth is, investing in growth.
But how are they paying for all this?
That's where their cash flow from financing activities comes in.
Okay, and that's where they track the money they're raising from debt and equity.
Exactly. And in fiscal year 2024,
Yeah.
their cash flow from financing activities was positive, $150.94 million.
Okay.
This shows us their borrowing activities, which have helped them fund those expansions.
So they've been using debt strategically,
They have.
and now they're looking to get more equity through this IPO.
Right.
But can they keep that up? Can they handle all that debt?
That's a good question, but their cash flow from operating activities is strong.
Right.
That gives them a really solid foundation for financing.
Right.
They're making enough cash from the business to handle the debt and future investments.
So their financials look like they're in good shape.
They do. They show a company that's growing rapidly, getting more profitable, and generating a lot of cash.
Yeah.
They seem to be managing debt well and investing strategically.
But what about those risks we talked about earlier?
Right.
How does their financial performance line up against?
Well, that's where this IPO comes in. It's not just about raising capital. It's about addressing those risks.
Right, and strengthening their position. So let's look at how they plan to use that IPO money. It's like their roadmap for the future, right?
Exactly, and it's a really detailed roadmap.
Okay.
The biggest chunk of those funds, we're talking $1,070 million,
Wow.
is going to their subsidiary, Havix.
Right, Havix. That's their big growth engine for the sterile injectables market.
It is.
So they're doubling down on that.
Yeah.
What else are they using the money for?
Next is debt reduction. They're putting aside $734.8 million
Okay.
to pay down some of their loans.
That makes sense, reducing their risk.
Exactly, and freeing up more of that cash flow.
Yeah, it's like clearing the decks for
Exactly.
smoother sailing later on.
Yeah. Then they've got $525 million for working capital.
Right, working capital, that's the fuel that keeps everything running.
Exactly.
Inventory, suppliers, production, all that.
Yeah, it's essential.
And lastly, they've got $293.4 million for general corporate purposes.
Right. Think of that like a reserve fund, giving them the flexibility to jump on new opportunities.
Okay, like a rainy day fund for strategic stuff.
Yeah.
So they've got a pretty clear plan for the IPO money, focused on growth and strengthening their finances.
They do.
But every investment has its risks. We've talked about the general industry challenges,
Right.
regulatory compliance, competition, and those unpredictable raw material costs. Are there any risks specific to this IPO?
That's a really important question, and the answer is yes.
Okay, what should investors be looking out for?
Well, one big one is the pricing of the IPO.
Okay.
If the shares are priced too high, that could really turn off investors.
Yeah, it's got to be attractive.
Exactly. And then there's the risk of dilution.
Dilution, so what does that mean?
When a company issues new shares, it can dilute the ownership stake of the existing shareholders.
Right, like cutting the pie into smaller pieces.
Exactly. And that can change earnings per share and potentially the value of the stock.
So pricing and dilution, those are big things to watch.
They are.
Anything else investors should keep in mind?
Well, it always comes down to doing your due diligence,
Right.
looking closely at their financials, really studying those risk factors in the prospectus.
Yeah.
Don't let the excitement make you forget to think critically.
Right, don't put all your eggs in one basket.
Exactly. Diversify. Do your research.
Understand the risks before you do anything.
Right.
And even with the best research, The stock market is still unpredictable, right?
Absolutely.
Things happen, the economy, investor sentiment,
Right. It can all have an impact.
even on a solid company.
It's like sailing in uncharted waters. You can have a plan, but you need to be ready for anything.
So investing in an IPO, it's not for the faint of heart.
Definitely not.
Okay, so we've covered a ton of ground on Senores Pharmaceuticals. We looked at their business model, their financials, their position in the market,
We talked about how they plan to use the IPO money.
and the potential risks, both for the IPO itself and for the industry as a whole.
Right. And we looked at their ability to handle all that based on their financial statements.
So what's the takeaway for our listeners?
Senores Pharmaceuticals has a really solid track record, a clear vision for growth, and they seem to really understand the risks involved.
They're tackling those challenges head on.
Yeah, and they're working to be a leader in the pharmaceutical industry.
Their focus on complex molecules, their work in all those different markets, and their R&D, it makes them a company to watch.
For sure. But like with any investment, you have to do your research, weigh the risks and the potential rewards, and make a good decision that fits your goals.
Great advice. And remember, everyone, this deep dive is just the start.
Right.
The world of pharmaceutical investing is always changing.
It is.
So stay curious, keep learning, and always be ready to adapt.
Thanks for joining us for this deep dive into Senores Pharmaceuticals. Until next time, happy investing.
And remember, the best investment you can make is in your own knowledge. Stay curious, folks.